Hi, we've made it to chapter 9, which is about finance. And there's a few things I want you to pay attention to as you're going through this chapter. First of all is capital. What is capital? Well, capital, of course, is money that you get, that you can borrow to help you run the business. They give you a little bit of support so that you can grow the business. Now remember, cash is the lifeblood of a business, and so capital from a bank or even from a venture capitalist, but we're sticking to financing right now, is a way for businesses to get some cash. Now, some of the decisions that they'll make is going to be based on a few things. One of those is risk. And risk is something that's quantifiable. Like you can say what a percentage of businesses in this particular area fails in the first year, or how many businesses failed within a certain time frame within a municipality. So these are things you can consider and things you can research as you make your decisions on if you want to get extra capital or if you even want to finance the business. It may be something that is like, well, maybe we don't want to do this. All right, so a few things we'll talk about in terms of this chapter. Cash budgets. We want to make sure that we have cash and to pay off our debts. Now, this is always possible, but this cash on hand is very important. You may have other debts such as equipment, mortgage on your facility, or rent on a facility which you're in. So those are long term. Cash pays the short term. That is your accounts payable. That's going to be the utilities. That's going to be your payroll. So we want to make sure we have that cash on hand. Now, a couple things I want to talk about is in terms of financing. There's something called equity financing. That's where the ownership puts in their money, their work into the organization. And then there's debt financing, which you can issue stock. If you're a corporation, you can issue stock and have people invest in your company, or you can go to the bank and debt finance that way. But typically that's done through stock and corporations. Now, one of the things I want you to pay attention to also is something called a balance sheet. And in regards to the balance sheet is something that gives the organizations how they're doing, and it could be a financial statement. It could be a balance sheet. It could be a financial statement. Balance sheet where your assets has equal your equity and your owner's equity and liabilities, which is accounting. And then the other thing I want you to take a look at is the financial statements. The financial statement is going to tell you real quickly how healthy the organization is, and when you are investing for your life, take a look at the financial statements, because every publicly traded company has to provide these, and it gives you a quick snapshot. And one of the things I want to point out is something called accounts receivable. Now, you may have a lot of money coming in that's accounts receivable, but it doesn't necessarily mean that you're going to get it. I worked in organizations, we worked on this catalog. It was $250,000 catalog. That would have been considered accounts receivable, but unfortunately, they went out of business before they could pay us, and so the accounts receivable really wasn't there. So pay close attention to accounts receivable and see if indeed their customers are paying them. So that's the announcement I have for chapter 9. As always, please reach out if you have any questions. Please let me know if you have any questions on a discussion question, on the assignments, whatever the case may be. And I will see you in chapter 10. Take care of yourselves and have a terrific day. Bye.